What's up, guys? Hope everyone is doing well. But my oh my, has the crypto market taken quite a tumble off the edge of the cliff over the last 24 hours, having over $2 billion worth of liquidations occur, being one of the most notable liquidation events of, honestly, the last 7 years. From what I've seen, it being more severe than what happened during the FTX collapse towards the end of the prior bear market for Bitcoin, around the end of 2022, even going back to the March 2020 crash around the time of COVID, Black Thursday. But really, I'm gonna get into that. I'm gonna get into the charts here. I'll bring up a few things on the screen as well relative to some of the fundamental news that's been going around and going on with respect to the whole notion of the tariff wars with America and Trump imposing the tariffs he has on other countries and nations outside of America, really with the aim to financially, economically squeeze them, to essentially coerce them into doing what he would like for them to do, and really just to accomplish things that he wants to accomplish as the new president of America for the next 4 years. But nonetheless, looking here at the 4-hour chart, we can see that looking at this descending resistance here, going all the way back to around 108K, mid-December 2024, Bitcoin was just trading. We had the second resistance here, eventually came back up, was sitting sideways recently. Now it's come back down and it's gone below this at this point, which isn't particularly the best thing to see right now. But zooming in, there is the potential that this move is already over, that this liquidation we've seen was a, some people might say, an intentional, targeted, engineered move. If you want to think about the whole context of market makers and liquidity zones, they're desired by said market makers in order to cause retail, specifically the what's known as the dumb money subset of the entire retail set of investors, thereby causing them to panic sell, driving the price down to reach those very liquidity zones that the market makers want to meet so that they can accumulate Bitcoin and really even other assets, crypto, whatever it may be, where they want to. But if we look here at this dump so far from the most recent local low down, it's around 15 basically percent from the current all-time high, around 109.4K. It's basically down 17%. So far we are seeing some easing up here. If I go down briefly here to the hourly, we can see so far from bottom to top, it's up around 5%, coming right up to this what was resistance so far, been support. Clearly going back to here, so around January 20th, here around the 27th, it was holding up as support. Price hadn't quite come down and touched this what was resistance. But really the point I'm trying to convey here is that this very well could be the end. If this is really just kind of a flash crash, a liquidation event. I mean, the fear and greed index dropped down from like somewhere around the 70s or so. It had been recently down to now 44. And there is a chart that I came across recently, which I'll overlay on the screen right now, showing the price of Bitcoin, showing the large investors, so things such as whales or smart money, institutional buyers like BlackRock and all the others associated with ETFs, with that line being in red, and then the retail investors, a lot of them being what would be called dumb money, being in blue. And ever since around November of 2024, the institutional larger investors, whoever they may be, the whales, have just been constantly accumulating since Bitcoin has been going up, and the retails have been just selling in droves. So really all this could be shaping up, especially because this was happened during the weekend, and we're going into a new week that we're Monday, the day that this video is going to be uploaded, could be seeing a bounce. And again, we could be very well seeing that right here. Although if we do zoom out, we can see that It has wicked into this purple zone here from around 87.6 all around up to around 92.8. The 800 EMA sits at around 89,000, so definitely could see Bitcoin come down a little bit more and test this 800 EMA, maybe sit around it for a little bit and then continue to go back upwards. Or it very well may continue to go lower. There's a relatively notable vector or liquidity based zone in terms of volume that was set during prior vector candles, which are going to be the market makers leaving their footprints. Here being around 85.1 to around 81.3. If Bitcoin were to come all the way down from there, from top to bottom, about a 26% move, 27% move. Those have been that's been kind of a typical move of this bull run so far. But one thing I really want to point out is if you look down here at the RSI, at its lowest, it's gotten down to around 22. It's gotten into the range of the 0.137 to the 0.197. And zooming out and going back, this is as oversold as it's been since August of 2024 when Bitcoin was going down to 50K and wicked down to 49K very briefly at the beginning of August. Right now, currently being around 22, basically 23. Not quite as oversold as back here when it was around like 13, 14, but it very well could get to that point. It's a little bit more comparable to, let's say, maybe something right here back in May. And even if we go back down to, it's actually also, I would say, most reasonably comparable to where we are currently to compare it to January, late January 2024. We could see that this got oversold to the degree of around 20, so closer to what Bitcoin looks like now. And also, this was, again, like I said, so this was late January leading into early February. It moved all the way down to just a tad bit above the 800 EMA, looking very similar to what Bitcoin looks like now. And overall, this was from 25K here back in September, October 2023, moving up to 75K in March, April of 2024. And this overall, this move here being the second leg of the Bitcoin bull market now, looking here from August, September, October 2024, leading into December 2024, now January here, January, February 2025, being this the third and I believe final leg of the current Bitcoin bull market. So again, we could be seeing the temporal trend shaping up here, and that we could very well be seeing this final shake off, this final liquidation event in order for the market makers, the smarter money, whoever they may be, to accumulate sub 100,000 at this point, just this final time to accumulate at 90 to around $95,000. And again, it may definitely go lower. When it comes to this RSI being heavily oversold, I mean, the MACD is at the same position basically. If we look here at the RVI, the last time the RVI was in such a reset or oversold state would be going all the way back to, again, around July. So, I mean, it's mostly comparable to, of most recently, this period of time when Bitcoin was bottoming out at around $55,000 to $50,000. It would also be comparable to here back in August of 2023. The RVI now isn't as oversold as it was back here in mid-August of 2023, but again, it's still comparable, and this is also when Bitcoin was bottoming out. It would also be comparable to here in March of 2023, when Bitcoin is bottoming out around $20,000, generally being comparable to highlight the range here from here. It would also be comparable to this range here as well. Now, obviously, in some of these scenarios, so looking at these three, Bitcoin bottomed out here. It still had ways to go here towards the downside, and then also here was continuing to go down a little bit until March of 2023. And then, like I said, right here in January of 2024, similar circumstance. So really, just to summarize this chart, could definitely continue to go lower, but there's also a good chance that Bitcoin does cover quickly here towards the upside beginning this new week, heading into Monday, throughout the rest of the week. If we look here at the daily, we can see that similar to the yellow descending trend line, the resistance that was flipped into support of the 4-hour chart, you see here, this time it's black, with the current daily candle. Now this is using the traditional candlesticks as opposed to the Chaikin Ashies that were on the prior chart. But right now we can see large wick. You know, a lot of what has already happened is being bought back up or moving towards the upside. So assuming over the next 15 hours or so that this body, this candle continues to get even smaller, this could shape up as a type of hammer stick candle, a bullish candle, something similar to this we saw back here in December 20th of last year, and you can see that it wicked all the way down to this horizontal value here, and clearly Bitcoin did nothing but continues to bottom out along this and eventually move back towards the upside. There was also another one of these candles here, right at January 13th, which immediately preceded this move all the way up to 109,000. So if that ends up shaping up, that'll look very good. I'm not particularly the most fond of the fact that right now the daily candle is below the 50 EMA band. Best case scenario, this will, need to continue to shrink, the size of the candle shrink, and then eventually, ultimately, approximately and roughly holding this, what was resistance, and fundamentally flipping it into support. But again, let's say Bitcoin continues to go lower here. There's also this yellow descending zone that's been support since December 2024. We could see Bitcoin come down to this zone. Also kind of really back into this purple zone as well. So anywhere down to around 86, 87, and if it does, we might continue to see larger wicks. So we could even come down and close candles right here, so maybe around 85, 86K, and then see some wicks down into this vector zone down to around maybe approximately 82K, where the 200 EMA is. That's a very realistic scenario that we could see here for Bitcoin over the next week or couple weeks. If I had to, give some sort of guesstimation, I would imagine that this probably will be short-lived, because I still do personally believe that Bitcoin has quite a ways to go in the bull market. I don't think the bull market's over. But also, if we look down here at the RSI, we can see that the resistance here was broken from here, early January leading into mid-January. And then with the recent drop, it's moved back down below it. It's also below the Bollinger Bands, and a lot of times, not every single time, it's not 100% guarantee all the time, but a lot of times when you see the RSI go below the Bollinger Bands here, typically that is indicating that the local low has already been set, or that it's going to be set soon. Or let's say that the local low has been set down at the wick around 91.7, and that we're just basically going to see Bitcoin kind of trade sideways above 91.7 and then reverse back up towards the upside. That's a scenario, but it could also continue to go a bit lower, especially down to around 85, maybe wicking down to 82K, as I mentioned. If we zoom out here on the daily and first look at the RSI here, it's more oversold than it was going back to around 60K back in October 2024. Which is a good thing to see, the fact that the price is roughly $35,000 higher, yet it's quite reset. If we look down here at the MACD, it's also coming back down to this green zone, which is a quite an important zone, factoring in the history of the current bull run for Bitcoin so far. If we zoom all the way out, going all the way back to December 2022, you can see that here, November, March 2023, August 2023, January 2024, every single time this green zone acted its support. And then once Bitcoin entered 75K and then traded sideways roughly down to the downside for around 8 to 9 months into September, October 2024, we saw these brief moves below. So this could be, again, quite comparable, something I was mentioning on the 4-hour chart, to back here in January, late January, leading into early February 2024, coming into the green zone. And just as we are here now a year later, could be coming back down into the green zone to find that support there. Because again, if you go back and you look here at this first move from around 15, 16K to around 30K for Bitcoin, right here, once Bitcoin tested 20,000, it was, this whole entire halfway period of this first leg was January, February, March, and then it topped out in around April. Fast forward 2023, you see September, October, 2023, moves up towards the midpoint around January, February, then leading into March, April is when it tops out again. And so far we've seen the same thing with recently. We see here leading into September, right here, 2024. Then we see as we go along October 2024 here, leading into December. And then now we're January, February 2025, just a year later from roughly this region, and just 2 years later roughly from this region right here. As I pointed that out plenty of times in recent videos, but really don't feel like I can stress that enough due to the importance of it. We look down here at the ROC, the rate of change indicator, which directly is showing the velocity of the price in the sense of being a vector. So it's having some sort of magnitude associated with the amount of volume that's, with respect to each candle in that nature. And then also the direction, whether or not that volume is being pushing the price towards the downside or pushing the price towards the upside. I find it interesting that looking here at the RVI, or the, not the RVI, the ROC here, it's still above the inflection point or the 0 point. It's still in the positive, which is, again, despite this massive liquidation event and this rapid, flash crash, this free fall, we're still seeing it's right now looking as if it wants to hold above this, just like it did back in January, closer to January 27th, just a few days ago. So very well, again, could not see Bitcoin continue to go too much lower here, and this was just a quick, rapid drop towards the downside, and perhaps we will see some sort of a kind of a rapid V-shaped recovery, maybe something similar to what we saw here back from around January 6th to around January 21st. We look here at this daily chart. Now, when it comes to this daily chart and the next chart that I'm going to go over on the weekly, I'm going to kind of slow down a little bit and really explain just exactly what I'm going to be going over for this chart in terms of the indicators, what they mean, what they represent, and giving some kind of definitions for them. But before I really get to that point, I just want to point out, if we look here at this ascending trend zone that was support from September 2024, October, we see again October, November here, it was support back in January, early to mid-January of this year. Now, with this recent pullback or correction, we've seen it go below this, which really is directly coinciding with the going below the 50 EMA band, which is, again, I believe I mentioned it, not something I particularly want to be seeing right now, but as I've been saying, we might get this a rapid recovery towards the upside if this doesn't end up sustaining into a larger pullback, like I was mentioning, maybe down here to around 82, maybe down to around 80K, so I mean like a 24-26% drop, or even down, I mean the 800 EMA sits down here at approximately 57,000. This would be a 47% drop, and historically speaking, as I've stated many times, as a criteria for bull and bear markets for Bitcoin, going back throughout Bitcoin's bull markets, it never significantly retraces below 40 to 45%. And even once it starts pushing that kind of like 44, 45%, that's really, I mean, like getting close. I mean, even it could retrace, 45%, which would put it right at basically, yeah, I mean, basically to 60,000 on the dot, specifically around $60,000. And so that right there is really the bottom of the barrel for me. I don't particularly think that it's going to do that at this point, but it's definitely on the table if there's just, for example, maybe there's a black swan that ends up coming onto the scene, maybe something similar to March of 2020. Again, thinking about the tariffs and Trump kind of, essentially just pissing off other nations for the various reasons he wants to do that. And, other things that could potentially happen in the near future that would meet black swan criteria. But really, there is this most notable vector zone here from 77.1 all the way up to 86.5. So if anything, I would expect this zone here to end up holding if it comes down this low. Again, the 200 EMA is also there as well. But when it comes to these indicators that I want to talk about with respect to price, so up here we have an RSI paired with Bollinger Bands. Here is just a MACD paired with Bollinger Bands. Here, the third indicator is the histogram of the MACD. And then lastly down here is going to be the RSE, or the rate of change. And to really kind of stick here to the price, the way that I personally was thinking about price in some sort of sense to de-abstract it, because it's this kind of price is this intangible, abstract, quote unquote object. And a lot of the times when people that I know in real life see me looking at the charts on my desktop or on my phone, they like, what are you looking at there? All those lines on your screen kind of just looks like you're looking at the Matrix. I mean, that's actually it's actually what someone said to me at one point in time. So I mean, and clearly this is quite a lot to digest and look at if you're not familiar with it. So one thing that I would recommend is thinking about price in a less abstract way and looking at the price here. As you can, a lot of the times, the market is, as you see me here highlighting, likened to a roller coaster, all these ups and these downs and all the emotional states that happen throughout all these ups and these downs. You have periods of euphoria. You get into the top of the roller coaster and you're getting excited, and then that drop comes in and your heart just sinks to your stomach and you're a little freaked out, you're a little panicky, you're a little scared because you're dropping down basically at a vertical decline. And that's really very much so what the market does to people. And a way to think about the price is just to think about the price here is like the tracks of the roller coaster, and the coaster, or the train that is on these tracks, is also, I mean, these are basically two sides of the same thing. Two sides of the price being made up of the tracks and the coaster itself. So you can like imagine a little Bitcoin guy and a coaster on a roller coaster track, and that's what this price really is. And to highlight this specific period of price here for Bitcoin, where it was in this descending channel, broadening. Doesn't really look too much broadening here, but it is. And you can see each of these times Bitcoin was coming up, hitting 75K, and it just kept making lower lows here, and it was setting lower highs, and then continuing to make, again, just lower lows and higher highs, and that's indicative of a downtrend. Doesn't mean that it's going to go down forever, or if it's in a total bear market, but at least this was a medium-term downtrend that ended up moving into an uptrend, as we've seen here, up to around 108, 109K. And down here for the RSI, to give an explanation of what it is before I get into a way to interpret this in the analogy I'm giving with respect to price. The RSI is a momentum-based oscillator that is used to measure the magnitude of change in the directional orientation of an asset. Again, think about the vector and the fact that when you're in your car, or like you're on a roller coaster and you're going at a certain speed, let's just say 50 miles per hour, that's just the magnitudinal aspect of a vector, the scalar. But if you're going 55 miles per hour due east, then that statement there is a vector, because you have the scalar, the magnitude, and also directional orientation. And this is what the RSI is really trying to capture. It also indirectly capturing the notion of the velocity, again, which is the vector. As I believe I said earlier, the ROC, the rate of change, is something that more directly captures velocity, which I'll get to here in a moment. But the RSI indirectly captures the notion of price velocity by approximating momentum, by smoothing and normalizing the differences in gains and losses over time. This being calculated by correlating the average gains and losses over a specified time period. It represents the relative strength of the bullish versus bearish price movement. So when it comes to the specified time period, like for example, clicking here on the RSI, a lot of the times you'll see here the RSI length, and then here the value of that. Most of the time it typically starts out at 14, and the higher you go, the more, I suppose, accurately you could say that it reflects price in a more proper manner. Typically, in some instances, I'll go down as low as to 9, but a lot of times I'm using 21, 32, and especially on higher time frames, I'll go as high as 64, because I've noticed that higher RSI lengths or periods, that gives a lot of interesting and positive signals for when the market's reversing or things relative to divergences or other factors that could be derived from the RSI. But the RSI generally oscillates between a range of 0 to 100. Typically, when it's above 70, it's considered overbought. When it's below 30, it's considered oversold. The key aspect of the RSI is the ability to identify potentially weakening uptrends, represented by the overbought conditions, and its ability to denote a potentially weakening downtrend, which would be represented by the oversold conditions. Weakening or ending uptrends are often identified by bearish divergences, where the price continues to make higher highs, yet the RSI, or really any other indicator for that matter, because I mean you can see divergences of any degree in just about every single indicator. But when it comes to the bearish divergences, you'll see the price continue to make higher highs, and the RSI specifically will be making lower highs. And weakening or ending downtrends are often identified by bullish divergences, where the price continues to make lower lows, yet the RSI is making higher highs. And again, the following is the RSI is not really meant to be used alone. It's not really sufficient enough to predict trend reversals, and it should be used with other indicators, and that is something that goes for all indicators. So you just really don't want to just be using a MACD. At least want to use like an RSI and a MACD, just at least 2 or 3. I mean, a lot of times I'm using many. Obviously there's 4 on here, and sometimes I think I've probably had at most like 5, 6, or 7. And it's ideal to have a number of them. I would say just at least 2, obviously, if the RSI is affirming the MACD and the MACD is affirming the RSI, or you have 5+ different indicators and they're all saying the same thing. And after, for example, here with Bitcoin, this 8 to 9 month downtrend, if you look here at the RSI, you can see from here July to August to September 2024, the RSI is building up. And here the price was continuing to make lower lows. That's a bullish divergence, and not just a bullish divergence, but a double bullish divergence. Sometimes there will be triple, quadruple. I, in my personal history of looking at charts, haven't seen, at least it's not, you know, it doesn't happen a lot, anything over triple bullish or even bearish divergences. But I mean, it does happen and can happen, but a lot of times double, triple, quadruple being fairly rare in my experience, are the more and more it happens, especially if the price seems to be finding support within a roughly horizontal range, similar to what happened back here with the horizontal range being somewhere around like 54K up to like 55, 56, 57K. With the RSI doing this, I mean, the MACD is also here doing the same thing as well. The histogram here is also doing the same thing from August to September, and even down here the RSI was doing the same thing, actually going all the way back to May. So this actually would have been an instance of triple bullish divergence, where we see here low, higher, higher, and then higher, as it's slowly just kind of building upwards, leading into this final moment here locally speaking of around $55,000 in September, and then led into the move up to 108 to 109K. So when it comes to the second indicator here, the MACD, this is going to be a MACD standing for Moving Average Convergence Divergence, which is a trend following momentum indicator that measures the relationship between two exponential moving averages, or EMAs for short. And EMA can also stand for estimated moving averages, like for example, the other indicator that you see on here, where this 200 EMA, this 800 EMA down here, the 50 EMA band being a part of the trader's reality indicator. These are estimated moving averages, if I'm not wrong. At least I recall whenever I've watched the guy who's associated with the making of this indicator refers to them as estimated moving averages. Unless I'm recollecting that wrongly, but I believe these are estimated moving averages. So I just wanted to point out the fact that there's exponential moving averages and also estimated moving averages. But for the MACD, again, it's measuring the relationship between two exponential moving averages of an asset's price. Commonly, the 12 period and the 26 period EMAs. The MACD line is calculated by subtracting the 26 period EMA from the 12 period EMA, while the signal line is the 9 period EMA of the MACD. So this is not your orthodox traditional MACD, because this is a MACD paired with Bollinger Bands. But when I'm talking about the MACD line, that's going to be here, this line. So see, it's for example here, it's pink towards the downside, then in this kind of liminal transitory stage of it being white, it then flips into bullish or turquoise, and then it flips back into white to transition into pink, and then that pattern repeats. And so the pink and the white to turquoise, that would be the MACD line itself, and then the signal line in the context of this is going to be the Bollinger Bands. And within a typical MACD, there's just going to be two just discrete clear lines, and they're going to be crossing above and below each other over a period of time. But the histogram, which is going to be here, this MACD with Bollinger Bands doesn't have a histogram, so I have another histogram down here. This is actually a normal MACD, so you'll see here with this is the way a normal MACD would usually look. You just see again these kind of clear discrete lines where you see whenever we had the MACD here flipping bullish and crossing the Bollinger Bands, we saw the cross down here on the normal MACD. But really I'm using this here just for the histogram. But the histogram represents the difference between the MACD line and the signal line, visually illustrating the momentum of price movements. When the MACD crosses above the signal line, it suggests that bullish momentum is gaining dominance, while a cross below the signal line implies bearish momentum is strengthening. Again, that's going to be associated with the MACD up here flipping bullish and then flipping bearish again, then flipping bullish, seeing the MACD line cross this the signal line, or in this case the signal and Bollinger Bands. The histogram's bars grow larger as the distance between the MACD and signal line increases, indicating stronger momentum, and shrink as the two lines converge, suggesting a weakening momentum. So for example, if we look here, I'll zoom in a little bit. If we look here at this move for the MACD towards the upside from November 5th to November 23rd, you can see that the signal, the MACD line itself was getting further away from the lower bound of the Bollinger Bands, so the Bollinger signal here, and you can see that this momentum here was increasing towards the upside and towards the bullish sentiment. And then somewhere you can see during this entire downtrend, as this MACD line is just getting further away from the upper line of the Bollinger Bands, you can see that the bearish growth of the histogram here towards the downside. And then also even you can see here with the movement we saw here with this slightly lower low in this region right here, the histogram of the MACD was building upwards. So again, you could also point out a bullish divergence. In this case, it would be more of an exaggerated bullish divergence, which an exaggerated bullish divergence is basically like a watered down bullish divergence. An exaggerated bullish divergence is where there is a slightly lower low set, such as I pointed out here, but it's very slight. It's borderline horizontal, so that would be denoted as an exaggerated bullish divergence. So if you're seeing the price coming down, and let's say it's making a double bottom and it's horizontal like this, but yet below that you see the let's say the RSI, the MACD, histogram, whatever it may be, is in association with this double bottom, it's doing something like this, then that would be indicative of a exaggerated bullish divergence. It also would be the same case for the bearish divergences. So if you see a double top like this, so an M pattern, opposite of a W, or double bottom pattern, this being a double top, and you see the MACD, RSI, so on and so forth, do something like this, then again, that's going to be indicative of an exaggerated bullish divergence, or bearish divergence in that case. Again, as I was mentioning just now there, a crucial aspect of interpreting the MACD is identifying these divergences, which signal, just as for the RSI, potential weakening of trend momentum. Again, with the bullish divergence occurring with lower lows, MACD making higher lows, suggesting a potential reversal. And then obviously on the flip side, bearish divergence is occurring when the price makes higher highs while the MACD forms lower lows, indicating potential downside movement. And then again, like if you have, like I pointed out, the RSI double bullish divergence, MACD double bullish divergence, histogram also has a bullish divergence, and then you finally come all the way down here to the RSI and you're seeing it's got a triple bullish divergence. I mean, it should have been made quite clear that during this region of local low, the span of from around 59, 57, 58K all the way down to, I guess, the wick all the way down to 50K, that Bitcoin is bottoming out and it was getting ready to reverse towards the upside. But when it comes to the ROC, or the rate of change indicator, this is directly measuring the rate at which an asset's price is changing by calculating the percentage differences between the current price and the price from a specified number of periods ago. Again, that factors into 14, 21. For example, here I'm using 21 again. This makes the ROC an indicator of the strength and direction of price movements. Again, that's going to be associated with the volume, where strength is basically in place of speed, and it's effectively approximating the velocity of the asset since it captures both the magnitude and directional orientation of the price changes, again, characteristic of vectors. A positive ROC, again, so that's going to be anything above this green line here, which is centered at 0, so anything above this is positive, anything below this is negative. But the positive indicates accelerating upward momentum, while negative ROC signals accelerating downward momentum. And that was one of the reasons why I mentioned earlier on this chart, the fact that after this liquidation event, and everybody just absolutely freaking out and being panicked and selling in an emotional state of frenzy, yet the ROC here is still, I mean, if you were to just be using this, and again, you should be using it in tandem with other indicators in order to gather some sort of confluence, best case scenario. The fact that it's still in this positive zone is quite, good. If you were to ask me, I mean, it could continue to go lower here, just if the price especially continues to go lower. But so far, it's looking quite nice. But like the RSI and the MACD, divergences can be identified with ROC. Again, as I've already stated multiple times, bullish divergences with the lower lows, and then the higher lows depending upon, let's say also with the hidden bullish divergences, you could see, for example, like a hidden bullish divergence, you're going to see the, or rather with a hidden bearish divergence, you'll see the price continuing to make higher highs. Let's just say something like this, whereas the indicator would be doing something opposite to that and continuing to go lower. Basically, that would indicate, like, for example, looking at like right here, you see that the price has made a higher high, but the indicator, let's just say it's the ROC or the RSI, MACD, whatever, is gone lower. The price is higher than it was beforehand, but yet the indicator is reset lower, so now it's got a little bit more oomph, or more strength, more force to continue to propel the price higher here. This has actually happened a number of times in Bitcoin trading. For example, if we go all the way back to the period of time right here for Bitcoin, you can see that the price is just continuing to go higher and higher, essentially just setting consecutive higher highs and higher lows. Or if you look down here, the RSI was doing literally the exact opposite, and the RSI was in a downtrend, whereas the price was in an uptrend. So that was despite the bearish divergences. So we're seeing bearish divergence in comparison to here, but yet the price is moving up, but the RSI in terms of support is moving downwards. So a lot of the times you'll see bearish divergences in an uptrend, but if it's printing hidden bullish divergences, such as I just demonstrated, that will, despite the bearish divergences, continue to sustain the uptrend. But also, again, just to point out the 0 point here, that's going to be very important, because this will serve as a signal indication when it does cross above 0, suggesting that bullish flip, or when it crosses below, suggesting a bearish momentum on the horizon. And then, as always, it's best to use this, as I've been really mentioning and stressing. You want to use this with other indicators, like here the histogram, the MACD, and the RSI, or whatever indicator you may enjoy using. And then also, while I'm here, like with these vector candles, so with the part of the trader's rally indicator, you see these black candles. Let's see, they're basically all right here in the sun. You see these black candles, you see this purple, you see this yellow, and you see the white. These are going to be the vector candles, and where basically the bearish ones are the black and the purple, and the bullish ones are the white, or the yellow here and the white. Basically, the yellow ones suggest, or they're explicitly conveying the fact that the bullish volume is increasing. But if you see these yellows in the highs, such as you did here, typically is an indication that it's going to go to the downside. Whereas if you see them in the lows, such as you did right here, it continued to move up. And then once a yellow one was printed right here in the highs, Bitcoin went sideways. It set a double top here, and then it clearly, as you see, it was going down towards the downside over here to the move down into 53, 54K. And when it comes to the white vector candles, again, these are going to be the other bullish ones. These are like just high bullish volume, higher than the yellow. So a lot of times, like for example here, you saw the yellow one and then you saw a white vector candle. That's going to be a good scenario, especially in the lows where you see that the bullish volume is increasing, and then you see a white one after that, which shows that it's increasing even more to the degree of it just being labeled as high rather than just increasing, showing that it's quite likely that it's going to continue to go up here. And then one thing I really want to specifically point out here is the fact that, again, you see yellow then white, and then as it's getting towards the top here, you see white, and then you see yellow. So the volume here was high, and then because the yellow came after the white, the volume here would have been to a lesser degree than the former candle. Again, this being printed in the highs in the same level that it was back here, just basically at around 70K, which then led to this move to the downside, and then also led towards this move towards the downside. When it comes to the bearish ones, the black ones again are going to be the flip side of the white ones, and the purple ones are going to be the flip side of the yellow. So for example, looking at like right here, you see that the black vectors are printed, then you see the purples printed in the highs, which is likely indicative that it's going to continue to go down here. And then once you get even lower, you see again black, purple, then you start to see purple, black, and then purple. And then once you start to see these in the lows, for example here, I mean, obviously we didn't have, let's see, we didn't really have anything past this in this point in time. So you could see that these were starting to appear in higher frequency at around, let's just say 62 down to around 54, 55,000. And this would have been, in terms of this segmented of price here, these would have been in the lows, especially taking into account the fact that it was around the 200 EMA right here. Also, if we look here at the histogram, you can see that the price here was going lower, had a negative slope, but the histogram had a positive slope, so there was an identifiable bullish divergence there. And really that was the only indicator really showing that. But again, like that, you're really using all of these indicators to find confluence with each other's the ideal situation. And not all in all times will, like if you're seeing a yellow and what you think may be the lows, it might not actually be the lows, and it might continue to go down. Like for example, I mean, this yellow back here in May of 14th of 2024 was in the lows, but then it went up to 70,000 and it continued to dump for many months afterwards down to 50K. So it's not like you see a yellow in the lows and it's this end all be all yellow candle that's going to initiate the next massive pump. The lower on the time frames you get, the harder it becomes to decipher what these vector candles are actually telling you. But at the higher time frames you go, it becomes far easier to actually decipher when they're in the lows, when the certain ones, such as the yellows, are printing in the highs and indicating the volume dying off. But like for example, let's go and look here at the most recent price action. You can see that back here, there was yellow vector printed December 16th as it was hitting 108K. Then immediately after, we saw purple vector increasing volume, and then we saw the high volume indicating that it's going to continue to sustain downside here. And then we see in this sideways range of around, it's just approximately 93, 92K up to around 98, 98, 99K. You can see these purple vectors here sprinkled in the lows. Also important to note that it was finding support along the 50 EMA in its band, then reversed up to 109K, and then you saw in these highs these two purple increasing bearish volume candles, which was at least just potentially indicating that a move towards the downside was coming, which we obviously have seen with this very large and notable liquidation event within the last 24, 36 hours. But the last thing I want to point out here is if we look here at the MACD, again, let's just show the entire price history of the current bull run. We can see how important this green zone has been. We can look all the way back at the beginning of the bull market. It just kept basically finding resistance roughly at it here until this most notable break right here would then lead Bitcoin from around 50K to 75K. Obviously, you know, right here and right here, there was rejection towards the downside, but this was also another instance of, for example, here and then to here, seeing a bearish divergence, but obviously the price here was going up and you could see the MACD was going down, so that would have been somewhat of a tricky, especially if you're new to looking at the charts, instance of picking up on the relationship between bearish divergences and hidden bullish divergences. But this green zone becomes most applicable and crucially important when you look at the most recent descending, you know, the broadening channel here, where you saw from 75K, the MACD went down, resistance, 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 and as soon as Bitcoin is coming back up here to around 70K, which is very important for the rejection here, here, and here, finally broke it and then moved all the way up to 108K. And obviously, like I said, pairing it with this bullish divergence here, the bullish divergence that was seen here on the RSI and all the other indicators that I already went over, this would have been really painting a very good scenario to buy and to take advantage of what these indicators are telling you. And now we're actually seeing the MACD come back up in here, recently finding rejection down to the 0 point, which could either end up acting as support roughly here in this zone, or we could see the MACD come down and rival the zone that was set all the way back, going to this descending price action of the prior you know, medium-term consolidation of Bitcoin's price action. But really right now, just to summarize and kind of give my final thoughts on this chart, I really want to see the price quickly recover here instead of going lower, obviously. I mean, if it goes lower, then obviously it's going to give the opportunity for good buying positions for Bitcoin, and especially the altcoins, because they're going to be bleeding far worse than Bitcoin is. But really, I want to see this 50 EMA here held roughly, with right now really just seeing some wicks below it, and then see the price quickly recover back up into this uptrend zone and then continue to go higher and finally break this kind of median here where Bitcoin broke above it, was finding support, then dropped below, and so far it's just continuing to find resistance down to where it is now. And doing something like this right here would be really my best case scenario right now. Bitcoin's not going to continue to go lower and really lose right now around $93,000 to $90,000. So lastly here, most of these indicators I already went over. So like, for example, this one here is the RSI. This one here, obviously the MACD. This one here is the histogram. And the one down here is actually the Chaikin oscillator. So I'm going to have to go over here, the Stoch RSI, the second one. Then down here, the fifth indicator, the SMIIO. And then down here, the Chaikin oscillator. But before I get to that, I want to point out the the price patterns that Bitcoin has historically liked to set, where you see here this fractal pattern. It was taken from this portion of Bitcoin's price. So from here to here is this pattern. And then from right here is this pattern right here. And then these two smaller patterns, so this one here and this one, are the latter portion. So it's this move here and this move here, where this move is this move and this move is this move right here. And what's notable about all of these is the way that they are forming. You can see here that what Bitcoin did during this instance right here was how I have it drawn out right here, where it's a horizontal, what I call a type 2 double bottom. Basically where you're seeing, just to redraw it out, you're seeing the price come down and set a double bottom like this, where I call it type 2 because there's these two peaks with respect to these two bottoms, which would be a variant of right here, a normal double bottom. And then right here you see the same thing literally as you see demonstrated right here, but instead of it being horizontal like this one right here, you see here more recently, with the you know, up here, the 2022, beginning of 2023 bear market as it's concluding, leading into our current bull market, you see that you see this kind of descending type 2 double bottom as opposed to the horizontal one back here. Again, just to kind of overlay each of these on top of them to demonstrate those differences. Whereas like if this was a normal double bottom, it would have just been seen as slanting like this and moved towards the upside. And I find it important to point out these because basically what happened at the end of each of these moves, you saw this move towards the downside, and then it had this kind of double bottom towards the upside as it did each of these times. As you see more clearly here with both of these patterns, quick move to the downside, kind of like rounds out a double bottom, then moves towards the upside. Again, quick move towards the downside, rounds out, and then shoots up towards the upside. Again, as I have demonstrated already with these ones up here. And so that's again, with respect to this bottom here in 2014-15, and this bottom here from mid 2022 to late 2022. But if we look specifically here at the bottom of 2011, 2012, and then here from 2018, 2019, you'll see just typical double bottoms, where here you can clearly see this type of more of like an ascending double bottom, whereas actually I mistook my highlight for this one. This one's actually comparable to this entire region right here. So what you essentially see is this ascending double bottom structure. And also what's interesting to note is the fact that this bottomed out here in October, November, basically just the end of 2011, whereas you see here 2018, you also see it bottoming out in October, November, December at the end of the year. And then also this second bottom here culminated in around February, March of 2012, and then fast forward 8 years later, you see February, March of 2020. It's when COVID Black Thursday. It's 8 years later as well, is something that's important to point out. You also look here, really 2015 or 2022 or 2014 rather, here was really when this began. So December 2020 or December 2014 leading into January, February, all the way into really August, September 2015. And then you fast forward 8 years later from 2014 to 15, you have 2022 and 2023. And that just happens to line up with, here we can see 2022 leading into the beginning of 2023. And just lo and behold, this bottom right here of 2014 and 2015 in comparison to 2022 to early 2023, as I demonstrated with these patterns down here, 8 years apart, look the same. Again, 2012, 2011 to 2018, 2020. Again, just roughly 8 years later. And 8 years later is directly relative and relevant to the whole 4-year cycle framework that many people apply to Bitcoin. And a lot of times when you're within Bitcoin social media, wherever it may be on, such as X or Twitter, people talking about the whole Bitcoin 4-year cycle. And it's no coincidence that you're seeing here approximately 8 years apart. You're seeing from here to here and here to here, they're doing the exact same price movement. It's just each time as Bitcoin progresses, it takes longer to play out because of the maturation of Bitcoin over time and the lengthening of the phases and the lengthening of the cycles. It's why the bull markets are less bullish over time and the bear markets are less bearish over time. So really to kind of use that as a precedent here, leading into the indicators here, and to further kind of hit home the confluence and the self-similarity over time of Bitcoin, really just mimicking past phases and past cycles. We look down here at the stochastic indicator with this second indicator here. So to go ahead and give a little explanation of this stochastic RSI, a momentum-based indicator that combines the RSI with a stochastic oscillator, effectively measuring the strength and positioning of the RSI itself within a specified range. Generally, stock RSI oscillates between 0 and 100, with readings above 80 typically indicating overbought conditions, or readings below 20 suggesting oversold conditions. This greater sensitivity that the stock RSI provides compared to the RSI allows traders to identify potential overbought or oversold conditions earlier, but due to such, it also may result in more false signals, especially in indecisive and uncertain markets. Unlike the RSI, which is derived directly from price data, the stock RSI applies its formula to the RSI values rather than the price data. Crossovers of key levels such as 50, which is going to be this midpoint here with this gray line, if you can see it, here is going to be very important, typically indicating in many cases, but not always, a shift towards bullish or bearish momentum, whether or not it's crossing above or below. It's all, again, really, this applies to all the indicators. Ideally, especially the stock RSI, used alongside what the RSI provided additional information and confirmation of signals given from the RSI, and to better detect these potential trend reversals. So like, for example, you can see here, and I'm going to go ahead and get rid of all these other indicators being so massive so as to really show this in comparison to the price. So if we go back here and specifically highlight this move of Bitcoin's price, so kind of roughly the first half of phase 1 of cycle 3 for Bitcoin, and then we compare this to the RSI of the same period of time, you can see that right here on the RSI, the beginning of the bear market at the end of 2017 came down towards the lower bound. This entire time it's indicating bearish momentum and just generally bearish price action. But as soon as we get to December 2020 or December 2018, January 2019, it instantly starts to move all the way back up towards the upside, and that coincided with this move up to around 14,000, and then obviously we saw the RSI, stock RSI, move back down, into ultimately culminating in March of 2020. But the price here was, had this descending support, whereas on the RSI down here you can see that it had an ascending support, so there is a bullish divergence there that you could have picked up on with respect to that March crash. Not on the RSI, which could have helped you further identify that. If you were just using the RSI, using the stock RSI here would have helped you identify that. I mean, also, just to give one other example, if we look here at this portion of Bitcoin's price history, so this is going to be phase 2 of cycle 2, according to my framework of Bitcoin and how I view it. We look here at the price, December 2013, all the way down here to August of 2015. It was the bear market of the phase 2. And we look here at stock RSI, moved all the way down, also set the same type of M double bottom, the type 2 double bottom to the price set. And then as soon as Bitcoin hit its low accumulation range here at around, just to give it a median, somewhere around like $225 to $250, and it was going sideways, you saw the stock RSI pick up. That's going to be, there's bullish divergence here. And then the entire time throughout this, this bull market that initiated afterwards, it mainly stayed within this upper bound here. Obviously, you saw these brief moves here towards the downside, but those were really periods of time to indicate good buying potential, because if you look here at the RSI was in a steady uptrend this entire time towards the upside. And there was even, like, for example, from here, January 2017 to March of 2017, the RSI was had a negative slope, whereas the price up here had a positive slope. So there would have been a hidden bullish divergence. And really the stock RSI, especially with this RSI uptrend going as low as it was, especially like, for example, if you look right here in September 2016 and compare where the price is right here, and then compare it to where the price is here, again, you see the price is ascending, but the stock RSI is descending. So it's a hidden bullish divergence there that's letting you know Bitcoin was at $200 approximately Now it's at $500, $600 approximately, but yet the stock RSI is drastically lower than it was, or the stock RSI is drastically lower at $600 than it was at $200. So that's letting you know that the stock RSI is heavily reset and has a lot of potential to really initiate a massive pump, which made a lot of sense because after here in August of 2016, this is when the most parabolic portion was underway, leading into approximately $20,000 at the end of 2017, beginning of 2018. So again, that's something important to look out for, crossing that 50 value here on the stock RSI. So when it comes to the other indicator that I need to go over here, being the SMIIO, which is an ergodic stochastic momentum index oscillator. This here is going to be a indicator. It's a refined version of the traditional stochastic oscillator, designed to provide greater sensitivity and smoother signals by reducing noise. Unlike the standard stochastic oscillator, which measures the position of the current price relative to the range over a set period, the SMIIO measures the distance of the current price from the midpoint of the high-low range for a given period. This adjustment allows the SMIIO to offer a clearer and more accurate depiction of market momentum. Like, for example, again, when I'm mentioning period here, once again, 21, there's also different criteria for this indicator, where the long length being at 21, and the short length here set at 7, and the signal line set at 28, where the signal line is going to be the black line here, as you can see me taking it on and off, where you see the actual SMI. The white line crossing above the signal line, going to be in many cases bullish, conveying a bullish sentiment. But the SMIIO applies 2 levels of exponential smoothing to reduce volatility and produce a smoother curve compared to the traditional stochastic oscillator, again, to kind of reduce some of that noise. Like, for example, noise, like this being a stochastic RSI, a lot of this looks noisy. It looks a lot less smooth out, especially if I were to bring these inputs down, this would just become wildly choppy, and it would really just be very noisy and annoying to have to read. And that's also one of the reasons why I mentioned using a higher periodicity on things like the RSI or these other indicators typically alleviates a lot of that noise and that choppiness, which gets a little bit hard to read and to decipher. But the double smoothing process that this indicator, the SMIIO, uses reduces the noise, as I've been saying, making it more reliable in these volatile market conditions, such as now. The SMIIO typically fluctuates between positive 100 and negative 100. Readings above plus 40 are generally considered overbought. Readings below negative 40 are considered oversold, though these levels can be adjusted depending on the market conditions. Again, like I mentioned for the RSI, typically 70 and above overbought, and 30 and below oversold. Like for the stock RSI, as I mentioned, above 80 is overbought and below 20 is oversold. And as I just said, these can be adjusted. A lot of people will use different or see different values as, that's oversold, this is overbought, etc. For example, this indicator down here goes by decimals. So like when I said 40, in this case, it's going to be 0.4, just to point that small little detail out. A moving average of the SMIIO line is often used to generate these trade signals. So again, that's going to be the relationship between the white line here and the black line. Like for example, if you look down here, when it got oversold here towards the end of the bear market in 2015, again, right here as we see 2015 February, the price is going sideways, and then we see the SMIOs building upwards. And also, all throughout this time, if you look here at the histogram of the SMIIO, it was building, it was continuously building upwards here, whereas throughout this entire build up here, the price was going downwards. So that was letting you know that as the bear market is continuing on its way, that bearish sentiment is dissipating over time, which led into this bear market ending bullish cross after it got into this oversold region. And then again, obviously, as you hear, it continued to go up, and the price up here continued to go up towards the upside. So those are important to look out for the crossovers, and also with that histogram being paired with it. But as I've been saying, the bullish signals, when you see the SMIIO, so the white line go above the black, suggesting that increasing upward momentum in price action, and then vice versa for the bear, seeing the white line. Like for example, at the beginning of the 2018 bear market, you see it goes below. And then also we see the same thing here as well, the histogram. You see that the price is bear market's going down, setting lower lows. Whereas if you look down here on the histogram, it was building up the entire time. Basically, with the price mimicking the SMIIO line going downwards, but you see this crossover here of the histogram, they're diverging from each other essentially, where you have the SMIIO line going downwards and the MACD going the opposite direction. And then eventually, once you see the histogram, the bear sentiment of the histogram completely dissipate right here in March of 2019. You see the bullish crossover right here after it got into this oversold territory. And then also as well, this indicator can be used to point out the bullish divergences and the bearish divergences. Again, I've already mentioned the criteria of those multiple times, as well as the bearish divergences with hidden bullish divergences. And that would also apply to hidden bearish divergences and bullish divergences and a downtrend as well, to sustain even though you'll continue to see the price go down in that context, similar to the price going up with bearish divergences and hidden bullish divergences. But this indicator, the SMIIO, also often provides signals earlier than the traditional stochastic oscillator due to its refined calculation method. And then also, with any momentum oscillator, any indicator has the ability and may produce false signals, especially during choppier, range-bounded, indecisive, uncertain markets. And as always, again, you want to use this ideally in conjunction with other indicators. Like an example here of a bullish divergence on the SMIIO is going to be looking here at the most recent bear market range low of the accumulation period here, 2022, and you see the SMIIO was building upwards that entire time. You also saw, again, looking here at the price, it was just going down, sitting lower lows, but looking down here at the histogram, it was building upwards until it dissipated entirely. Again, you had the bullish divergence in the accumulation low range. It leads into December 2022, at the end of 2022, beginning of 2023, and then lo and behold, on top of that, you even see the pi cycle low here printing, and you see the wave indicator here also identifying this being the bottom zone. And then, uncoincidentally, it's almost as if, a lot of people that say the charts are meaningless, they're not really meaningless. I mean, if you're using the right indicators and you know what the data is actually saying, then this stuff is, in most cases, approximately predictable. If you're really good at what you're doing, then you can precisely predict it or precisely buy the absolute bottom, but typically it doesn't happen that often. But then obviously, as you see here, we're seeing the bull market, and I believe it's in a traditional 5-stage impulse wave, which should be a part of Elliott wave analysis. And I believe, despite what's going on up here with Bitcoin, we're going to see it continue to go higher here sometime quarter 2, maybe early quarter 3, anywhere from around approximately 200K to 300K, maybe at lowest 100K or 180K, my bad. And I think somewhere around 200 to 250K is what's more likely than reaching 300K, because there's a lot of people talking about super cycle, this and that, and the current Trump administration and the fundamental landscape just propelling the bull market for, maybe even the next 4 years of Trump's administration. I mean, when it comes to the whole super cycle idea, what super cycle terminology comes from back here. So what we're looking at here currently is phase 1 of cycle 2 for Bitcoin, and phase 1 is characterized by this double bottom, which I've already pointed out. Then it leads up into this kind of ABCD like bull market. So again, this is phase 1, cycle 2. Fast forward to cycle 3, phase 1, which is what Bitcoin's been doing since the bear market began in 2017, 2018, when it culminated the bull market prior to that at $20,000 approximately. And now we're seeing cycle 3's iteration of phase 1, where again, as I already made the comparison, we're seeing the double bottom just approximately 8 years later at the same times, again, end of the year, October, November, December, then leading into the second double bottom here around February, March, April. And then we see this top out right here at 64K. Structurally, 64K is the all-time high. On-chain data would also affirm this as well. And then let's just go back to phase 1 of cycle 2. We can also see that this top right here, guess what? It topped out in April. Then this next top topped out in December November, December 2013. So contrary to what I think, maybe we see Bitcoin top out in around like Q4, basically somewhere around like October, November, December. But still, right now I'm sticking to Q2, early Q3. And then also, before I get to the next indicator, just want to point out here on the weekly that the wave here, the bottom lower bound here of the support acting in right here, September, October 2024, again, as a part of the temporal trend. Again, September, October here in 2023, second leg, now we're on the third leg. Likely, more likely than not, I don't think we'll see Bitcoin close below this lower bound line here, which at this point sits at around like 80, 88.5. Maybe it wicks below it. Obviously, there's some wicks below here, but it never closed below it. So ultimately, I think right now this is going to hold until that is invalidated. But to zoom back out here, let's look at the next indicator. Down here, the Chaikin oscillator. And this is going to be a volume-weighted momentum indicator. If you haven't picked up on it by now, I noticed every time I talk about their momentum-based indicators, obviously the ROC is more directly associated to conveying the velocity, but generally all of these indicators are conveying a sense of price momentum and what direction it may be going in, which I'll get to some sort of an analogy for that momentarily. But so the Chaikin oscillator is a volume-weighted momentum indicator that measures the accumulation distribution of an asset over time by calculating the difference between a 3-day and 10-day exponential moving averages of the accumulation/distribution line. The AD line itself is derived from a weighted factor based on where the closing price falls within its daily range and the corresponding trading volume. When the oscillator crosses above the zero line, so again, similar to the ROC, that's going to be this green line right here. But when it crosses below this, it suggests growing, or when it crosses above this, it suggests growing accumulation or bullish momentum, whereas if it goes below, it's indicating the increasing distribution or bearish momentum. So obviously going above, it's cumulative bullish period, going below distributive bearish momentum, bearish period. This indicator effectively captures changes in buying and selling pressure, offering insight into whether price trends are supported by strong volume, often serving as a precursor to price reversals. Again, this can also be used for divergences as well. One thing I do want to point out here is that if you look closely, there is a bearish divergence shaping up from respect to here and here, I believe. This is also shaping up here on the SMIIO as well. Don't really see it on the histogram, don't see it on the MACD, don't see it on the Stoch RSI. You see it here on the RSI as well. And I'm not trying to really point that out. I mean, I suppose this could lead into a sustained, maybe the bear market is actually beginning. Maybe this liquidation event is the gunshot to the bear market, but that's really just not what I believe at this point for many reasons. But one of the main things I want to point out here for the Chaikin oscillator is this yellow zone here towards the bottom. You can see back in 2011, back in 2015, 2019, and then most recently 2022. These were met coinciding with the low, again, 2011, 14, 15, 2018, 19, 2022. Also, when you see the pi cycle lows here being met as well. And really, to summarize and culminate all of this, to bring back up each of these indicators and show them as best as I can to really get a good view of all of these, showing the MACD, the histogram, the SMIIO, Chaikin oscillator, all of them. You'll see that using all of these, you'll find the confluence that you're looking for. So for example, let's look at 2015 of January to September 2015. You saw the RSI, and along this RSI I have an inside pitchfork, a decreasing channel to help pinpoint it being historically oversold in terms of the bottoming of the bear markets. You see that the RSI is in this zone below 786. You see that the Stoch RSI had just recently bottomed out and creating bullish divergence, just like the RSI is. You'll see here on the MACD, which I'll have to zoom in on here, is also doing printing a bullish divergence here as well. If you look down here at the histogram of the MACD, you'll also see, as I believe I may have already pointed out, but throughout that entire bear market that the histogram was just slowly dissipating until it converged and finally flipped the bear market into the bull market. Then obviously with the SMIIO, obviously get to the oversold region, bullish divergence. As I already mentioned, the histogram was dissipating and converging to flip bullish. And then down here is what you can see that the Chaikin oscillator just had a V-shaped recovery and was, as the price was going sideways here during this period from January 2015 to September 2015, the Chaikin oscillator was just doing nothing but going upwards. And that would be roughly to say the same thing for 2018, 2019. There wasn't actually at all any bullish divergence for 2018, 2019, but for 2022 here, most recently there was plenty of bullish divergence at that accumulation range low. But when it comes to, again, the kind of the analogy that I was making earlier with the whole idea of the roller coaster and thinking about price in a less abstract way and just really looking at the price as if it's, you know, a little Bitcoin man in a roller coaster train riding on the tracks that is Bitcoin, with the price being both the coaster or train itself and the tracks itself, as in like the two sides of the same coin, similar to how DNA has two strands and they need each other in order to actually complete the full structure. Again, similar to how a coin being one object has two sides. But I do want to point out here on the Chaikin oscillator that, again, it's still above it in a positive orientation. So until this really starts to go below, until we start to see, again, certain other instances appearing on these indicators, and especially if all that starts to happen and they start tanking while Bitcoin starts to significantly go below the lower bound of this wave, then really there's not any good reason to think that the bear market has already began or is beginning right now as I speak. Although, I mean, this model here, this wave indicator could be broken, it could be invalidated. There's also the power law here, the white line that sits at 75K, so maybe Bitcoin comes down to it and then continues to go towards the upside. I mean, obviously there's so many things that could play out here. One of the things I recently said on a post on X was the fact that, like, if you take the entire set of all analysts and the routes that they're speculating on, and you put every single potential price route possibility, and you take the entire set of all these possibilities, you have the quantum wave function of Bitcoin, for example. But obviously only one of those price routes is going to come to fruition and is going to collapse into a classical state or a classical decoherence. And just really using that as an interesting parallel in a way to speak about all of the analysts' positions and the views. Like, I think it's going to do this, and this other person thinks it's going to do that, and this other person thinks it's going to do something else. And obviously, taking all these into consideration, only one person or all the group, the subset of the total set is going to be right. But all those people that were right were projecting and speculating on the same route, because obviously at the end of the day, Bitcoin, any other asset, is only going to do one thing as it trades into the future. But really the last thing that I want to talk about here, and for now I'm just going to zoom in here on the current phase 1 of cycle 3 for Bitcoin. Now throughout this video I've been talking about vectors, I've been talking about the velocity, and just a few moments ago I was talking about quantum physics and mechanics and kind of comparing that in an interesting, insightful way to price action, and like so many possibilities being, I mean, for example, I could sit here and like, oh, Bitcoin's going to do this, oh no, it's going to do this, and it's going to do that, or it's going to maybe go down and it's going to go up. I mean, there's so many different, I could just continue, it would just look like an incoherent mess, and that's really what the quantum wave function of what the infinite, quote, infinite possibilities that are lying here in potentiality, obviously it's going, as I already stated, one thing is going to happen. But so when it comes to the idea of the vector, the velocity, the momentum, and obviously in physics you have the equation of displacement over time gives you velocity, velocity over time gives you acceleration, and then really the important one that I want to stick on is you have velocity times the mass of the object, which has velocity equals the momentum. But in the case of the market, it can be recontextualized in the sense of velocity, which is obviously already depicted by an indicator such as the ROC, and obviously the price itself being a vector having a directional orientation towards the upside, downside, or sideways with, you know, volume and buying pressure sending it up by a large degree or sending it down by a large degree or small or whatever. But in the context of the market, this momentum equation could be recharacterized as the velocity times the volume equals the momentum of the asset. So again, you can think about it as we see Bitcoin here, just a roller coaster with the Bitcoin man in the car. It's, you know, he's going down, he's not having a good time, he's scared, then it starts going back up, and it starts going back down again, but ultimately it's already in a macro bull market and it goes up. Now here we have the next bear market, it's going down, then recently we've been going up, and now we're, I believe, about to reach a new all-time high to culminate phase 1 of cycle 3 for Bitcoin. And this can be, again, characterized by the velocity times the volume over time. For example, in this bear market back here, it's got a negative directional orientation, a bearish orientation of the velocity going towards the downside, and throughout that entire time, the volume here is disproportionately bearish. And then when you pair that with the fact that the price is going to have a velocity regardless of what it's doing, whether in what direction it may be going, in that case, obviously back here, it's this bear market. So we have a velocity paired with significant downside volume pressure, selling pressure, bearish volume, it's going to be a bear market, and then vice versa. Velocity paired with high buying pressure, high buying volume. Again, we have the bull market here leading up to 64K, or the recent bull market from 25K up to now 109K. And to kind of end the video off here, I just want to talk about and sum up this idea of, you know, kind of this analogy with the whole, like if you're new to this, looking at price not as this abstract, you know, these candlesticks that are, you know, kind of difficult to read as if you're new, to really kind of think about it literally as a physical object, especially Bitcoin, because I mean, for those of you who if you may not be familiar with the work of Giovanni Santostasi, he's a, you know, astrophysicist that has, you know, physics degree and education in physics, and is obviously well knowledgeable and well versed in things relative to having the whole power law theory. And a lot of people are, you know, combative with them. A lot of people say that the power law is going to be broken, which you can see the power law here on the chart. As I mentioned, it's this white line that spans kind of roughly through the middle of Bitcoin's logarithmic growth here. But really, I mean, and something I've said in past videos before I even knew about what he was doing, that where Bitcoin isn't really just your traditional asset, especially factoring that it's following a power law, it seems to be a literal force of nature. I mean, if you look at the protocol of Bitcoin itself and the mining process, you know, the technicalities of the white paper, and just really the fundamentals of the technology itself with the hash functions and everything, and like the whole mining process of when you have miners using computational power, and they're basically, instead of, you know, human beings using physical, you know, they're exerting their physical energy through labor with a pickaxe and a mine, or however, you know, it may be done, mining the Bitcoin physically, and they're giving up their energy to get that gold. Whereas nowadays in the modern society, Bitcoin being digital gold is now being mined through, not through the labor of the man himself, but through the computational electric energy-based labor of the, you know, a computer, or like, you know, like a mining rig or whatever. You know, you think about all these massive warehouses that have all these mining rigs that are consuming a bunch of energy in order to facilitate the mining process of Bitcoin, basically just generating random outputs until it gets the right one, and then that person ends up winning the block or mining the block of Bitcoin, and then gets the reward associated with it, with the halving process going from 50. Well, the halving of Bitcoin happening every 4 years approximately, and then going from, you know, whenever somebody mines a block, and then you get, back in the early days, you got 50, and then 4 years go by, you get 25, then you get 12 and a half, you get 6.25, so on and so forth. And supposedly the Bitcoin is supposed to be the last Bitcoin, or the last set of Bitcoin will be mined by, around 2140. So when it comes to the velocity of price representing the rate of price change over time, akin to the indicators such as the RSI or the MACD histogram, the volume of an asset serves as a proxy for mass, where a proxy is essentially, like, for example, to use it in the context I'm using it here, where you have the volume being a proxy for mass, because this, as an intangible abstract asset that Bitcoin is, it's not a literal physical object. It doesn't actually have a mass. So in order to, factor in something and to replace the mass, i.e. the volume, this would be a proxy. So it's basically because I'm comparing something that is abstract and non-physical to the physical equation of mass, or not mass, but for momentum, which factors in velocity, and mass equaling momentum. Because I'm having to apply this to Bitcoin, an intangible object, I need to have a proxy or something to substitute for the mass, which in this case would be the volume, which is interesting because it represents the market participation or trading intensity behind the movement of price. Think about it this way: the masses, again, keyword, I'm trading in volume for mass in it, so the masses, such as the set of individual and institutional buyers and sellers, are collectively aggregating the net quantification of volume at any given point in time or over a period of time. Where it's rather ironic that this can be articulated by referring to the set of buyers and sellers as the masses who contribute to the state of the market volume due to the replacement of mass with volume, and this analog between a literal physical formula equation, velocity times mass equals momentum, but in this context with an intangible asset such as Bitcoin, its velocity times volume equals its momentum. And when you conglomerate the fact that an asset's going to have a velocity, and then you factor in that what the volume pressure is saying, it's going to then shoot that velocity towards the upside or towards the downside, or maybe it's going to make it go sideways. And being similar to the mass of a tangible object, the volume of an intangible asset quantifies its weight in a way. In other words, the volume of an asset is market mass. The aggregation of individual and institutional participants forms the mass, quote unquote, that gives bullish or bearish sentiment to price velocity via the volume, via the buying and selling pressure. Just as in physics, greater momentum makes an object harder to stop, in markets, strong price movement, just the in general velocity of that movement, paired with high trading volume, whether bearish or bullish, is more likely to sustain and influence future trends. On the contrary, price changes with low volume often lack significance and are easier to reverse, such as an object with a lesser mass is going to be easier to stop. And you'll be able to stop it more quickly. Whereas, like, for example, when you look here at the price of Bitcoin and you see, for example, look at the March crash, March 2020, COVID, Black Thursday, and then all of a sudden it just ramps parabolically up towards the upside. During this period of time, price of this for Bitcoin, it was going down right here, and it was having its velocity was factoring in a bearish volume selling pressure, and then all of a sudden it bottoms out, and then that volume pressure turns and flips bullish. There's more buyers than sellers, and then all of a sudden that velocity then changes from being, let's say, a negative velocity to a positive velocity, and you see this massive upheaval from $3.8 thousand all the way up to $64,000. And really, to put it simply, think about the price of an asset as if, again, as I've been saying, as if it's a physical object progressing about a vector path, the vector path being the price itself, just as a car is driving on a road or a roller coaster is on its tracks. And associated with this vector path are the various metrics and statistics derived from the context of its movement over time, i.e. the indicators. And that the net volume, or also the general volume as well, because there's a difference between net volume and general volume, whereas net volume kind of is really kind of just pointing to the, whereas like with general volume, for example, if I pull it up on here, we can see that the typical volume is really just going to down here, you can see it's just going to be showing the overall volume of a specific candle. Like obviously throughout right here, we had bullish volume, whereas obviously during this period right here, there was some degree of bearish volume as well, and net volume would then basically combine those two in order to have an output that, like for example, if you take in a period where the bullish volume is outweighing the bearish volume, and you take that bullish volume and you take that bearish volume and you subtract the bearish from the bullish, then gives a net volume. But to continue, so that net volume or general volume, whichever way you'd like to look at it, that is generated by the aggregation of the mass of buyers and sellers can be seen as the directional attribute of the vector, which is the price of an asset. So again, the price of an asset, for example here Bitcoin, is a vector because it has a magnitude or a scalar associated with it, which is going to be the speed aspect of the volume. And then that speed aspect is given a direction, or a speed aspect of the not of the volume, but of the price, or the velocity is what I meant to say, not volume. They both started with a V, so I confused them. So you have the speed aspect of the vector, the velocity, and then that speed, the magnitude, the scalar, is combined with the directional aspect of the vector, the velocity, and that directional attribute is the volume. So let's say that, for example, just to kind of draw it out here. So let's say Bitcoin is going, 40 miles per hour, right? And then you have, in this case, because it's just going 40 miles per hour, you can just say it's going in a straight line. Whereas when you factor in, let's just say, not to really quantify it or anything, but you factor in the fact that it has a disproportionately significant bearish volume, here it's just going straight with really no significant upside or downside. It doesn't have obviously that directional aspect outside of, obviously, that you could classify that as a kangaroo or sideways market. But as soon as you apply a significant bearish volume or selling pressure to this kangaroo market or this straight line, then you see the price start to tank off. And so now, instead of going 40 miles per hour straight, it then applies that down to 40 miles per hour to the downside. And as the volume pressure picks up, this 40 miles per hour could change into 60 miles per hour. Or like to the flip side, obviously, let's say that the volume was being pushed towards the upside, it was significant bullish volume or buying pressure, then the opposite would happen, and then this would pick up towards the upside, going from 40 to 60 miles per hour to 100 miles per hour. And that would be something that would typify what's going on in here. If we look here at this segment of Bitcoin's price, where you see bearish volume here towards the downside, has, let's say it's going 40 miles per hour, and then here it starts to pick up. Now we have more significant disproportionate bullish or buying pressure volume. Now it's going, again, let's just say 40 miles per hour, then it resumes back down 40 miles per hour, and then it starts to pick up. It's 40 miles per hour, 40 miles per hour. Then it reaches here, and then it ramps up and really starts to go parabolic. And let's say it's going 50, 60 miles per hour. You could show, again, a really good way to exemplify this would be with this phase 2 bull market of cycle 2 for Bitcoin. You can see kind of during these earlier periods of the bull market, it was kind of slow, just gradually stair-stepping its way towards the upside until it reached roughly around right here. And then let's say this entire portion of price right here is, again, let's just say, 50 miles per hour. And then from here all the way up to here, you see that this parabolic ramp up once Bitcoin was getting back above the prior all-time highs right here. You could see that once it did that, it had price discovery. It was just a blue sky breakout. And then this 50 miles per hour doubled and went to 100 miles per hour. So that's really what I'm trying to get across, and what I was trying to get across going over the whole roller coaster analogy, speaking about the whole idea of the vector, the velocity, the, in physics with the velocity times mass equaling momentum, but in the context of the market, you have velocity times volume, as a proxy for mass, equaling the momentum of the price, whether or not that momentum is going to be shifted towards the upside or the downside, or if it's going to be indecisive and uncertain in a kangaroo sideways horizontal market. But I believe that was all that I wanted to go over in this video. So again, as always, none of this is meant to be financial advice, as I did make this video rather educational, more so than what I've typically been doing in some of my recent videos. Generally, my channel is meant to be educational, but not always in every video do I go to such an extent and in-depth degree so as to really talk about things and give definitions and to give analogues for certain aspects of the market, as I did in this video. But again, as everything being said, everything gone over, I hope you all enjoyed. Hopefully the analogues that I gave in the simplifications to try to de-abstractify Bitcoin and any asset in general will be something that you'll be able to pick up on and be able to utilize in your growing journey of understanding the market. But as always, I hope you all enjoyed, and I hope you all have a wonderful day.
Ooh, I regret now.